Right, moving on now. Amid the ongoing controversy surrounding the development of Chennai's second airport in the town of Parandur, the Tamil Nadu government has reported a milestone in its land acquisition process. The state said it has already completed the acquisition of 1,100 out of the 5,746 acres of land it is setting out to acquire in order to begin building the airport in the town of Parandur. The Tamil Nadu government has already disbursed a total of 856 crore rupees towards the acquisition by way of compensation to landowners. Out of the 1,155 recipients of this compensation, nearly 557 are residents of Parandur, the government said. Remember, the Tamil Nadu government was hoping to close out the land acquisition for Chennai's new airport by the year end. However, going by present-day progress, that timeline seems likely to spill well into 2026. On to some real estate action from Chennai now. The city's residential market will continue its growth trajectory despite other major property hubs seeing a slowdown in the first half of 2025. That's the word coming in from JLL's Head of Residential Services, Siva Krishnan. Speaking exclusively to ET Now, Siva said that Chennai's trend of just 5 to 6% annual price appreciation compared to Bengaluru's 15 to 20% has meant that consumer interest in the city's residential portfolio has more or less remained solid. However, he also added that the slow pace of approvals could lead to mounting interest burdens, and this in turn could upset that balance. Here's a slice of that conversation.
From a Chennai perspective, post-COVID, it has triggered all asset classes, whether it's office market, whether it's industrial, whether it's housing, whether it's data center. It's been doing extremely well, cutting across all asset classes. What stands out for Chennai is that Chennai used to hover around close to about 3.5 to 4 million in terms of gross absorption on a year-on-year basis. Come COVID, from 2021 onwards, we have been doing close to about 8 to 8.5 million. As we speak, every possibility of crossing the 10 million for the year 2025. So what's actually triggering the market is affordability from a perspective of valuation for the residential houses, plus the net employment which is being generated from an affordable perspective, who can come and buy the property, is an upswing in Chennai. Another interesting aspect, unlike other cities across South, in terms of the price increase in the last 4-5 years has been quite stable compared to a market like Bengaluru. It's been growing at about a pace of 15-20% on a year-on-year basis, whereas Chennai has been quite stable, close to about 5 to 6% on a year-on-year basis, which has actually created a scenario where the markets are getting affordable from a segment which can come and buy the property. So you're seeing a trend where one side you have an office absorption which is creating an affordable population to buy the property, and the price increase in the last 4 to 5 years has been quite stable. This both is synergizing the whole market, and that's why you're seeing the Chennai market on an upswing and leading the race across all cities across India.
I'm really glad you bring up pricing, Siva, because the same jail report that I referred to also spoke about Pune, Mumbai and Bengaluru seeing the most price appreciation, with in fact a large chunk of available inventory being priced at, if I'm not mistaken, 1 to 3 crore rupees per unit. And this is, of course, an average weighted perspective that I'm talking about. The fact that you have not seen that so much in Chennai as you have in these three cities, does that mean that the buyer here has a lot more options? Pricing is a lot more buyer friendly, and do you continue to see a very warm or a nice comfortable ticket size doing the rounds going forward in terms of future buying trends insofar as residential units are concerned?
So if you look at it across the board, again I'm taking about COVID as a benchmark. Post-COVID, what we're seeing is there's an increasing trend towards the larger sizing, and also in terms of moving in from 2 BHK to 3 BHK, 3 BHK to larger 3 BHKs and 4 BHKs. So in terms of the capital value, what we've seen is that from a 50, 75 lakhs bracket, it has completely moved to about 1 to 3 crore kind of a bracket. In that, Chennai still is in about 1 to 1.5 crore bracket in terms of the maximum sale which is happening. If you take a pyramid, that 1 to 3 crore bracket has moved from about 33% market share to close to about 40% as we speak, compared to vis-a-vis last year. In that, the 1 to 1.5 crore rules the roast in Chennai, and that's a sweet spot. And that's why I'm saying that this trend will continue. You will see a robust growth, velocity, and a slight about a stable price appreciation, which is on a year-on-year basis, which is very important for a sales to continue. Because the moment the sales velocity start dropping, real estate at the end of the day is like an investment product. Sales appreciation, price appreciation also is an extremely important component as far as the growth is concerned. So I strongly believe Chennai is in a strong wicket where there is room for appreciation from a pricing perspective, and the ticket size is hovering around 1.25 to 1.5 crore. Great bet to continue the stable growth. Another interesting aspect, Jude, is that compared to all the south cities, the plots percentage in Chennai is high. It's close to about 15 to 20%. Whereas a similar market like Bengaluru or Hyderabad hovers in single digit. Right. So the contribution of plots also is slightly better from a proposition for Chennai market. So it's a very stable period. I strongly believe this trend is continue for next at least for 24 to 36 months time.
Right. And in keeping with that itself, and I want to talk a little bit about future inventory and launches, do you see that pipeline being stable, and do you see a continuous inflow of inventory so as to continue balancing out these market equations insofar as pricing and supply is concerned? What does the future hold with regard to inventory in the pipeline?
Two aspects to it. One, across India, what we're seeing is that relevant products have come into the market. So the developers cater to the relevant segment, relevant buyers, relevant sizing also at the end of the day. Now, from a Chennai perspective, three micro markets stands the hottest. One is the OMR segment. The second one is the PTR segment. It's called the Pallavaram Thuraipakkam Road. Another one is the Mount Punamalli High Road. Why I'm talking about it? Because these are three segments which derives employment from an ITS perspective, from an office absorption is concerned. All said and done, the affordability in terms of buying the property comes from ITS today, unfortunately. And that is maximum from these three micro markets. Now, another interesting thing which I feel is that the sales velocity and the launches will move towards places like Vandalur, Kelambakam, Tayur, Tiruporur, Padur, those segments, Siriseri, because one, your metro connectivity starts happening from Siriseri, from Madhya to Siriseri, and the connectivity from Siriseri to all these micro markets is going to be easy, and the price points, which is an extremely important point from an overall sales velocity perspective, I think it'll be reasonable in these micro markets. So you can find properties at about 6,500, 7,000, 8,000 these micro markets. Other micro markets, which used to hover around 6,000, 7,000, all have become 10, 12, 15 as of now. That's because the land valuation has really gone up in the market in the last 3 years. So I think these three micro markets will do well. In these micro markets, I will bet on in places like Padur, Siriseri, Kelambakam, Tayur, Vandalur, these locations, which is not very far off from this nearest metro station. Also in the Mount Punamalli, closer towards Punamalli, also will do extremely well. Right. And also the markets like Medavakkam, your Vengai Vassal, all that which connects the Pallavaram Thuraipakkam Road, also will have a better traction and appreciation. Right.
I want to focus on the CBD for a bit. Certain land acquisitions in the recent past, certain deals have made more headlines than the others for good reason. For example, the iconic Mount Road acquisition by the Brigade Group making headlines for its big ticket value. Similarly, the Standard Chartered Land Bank acquisition by Bashim on Haddo's Road as well. Another headliner acquisition, so to speak. Siva, what is there in the pipeline in terms of big ticket acquisitions are concerned? CBD acquisitions and deals always excite most of us, given that they are a great indicator of the health of a market and its CBD area itself. If you could look into your crystal ball, or perhaps your what you know that lies ahead, do tell me, are there any such big ticket acquisitions in the offing insofar as Chennai's CBD market is concerned?
So this is a trend that we've seen in the last 2-3 years' time. And if you look at from a valuation of land perspective is concerned, the market has really zoomed. And in fact, The first trigger happened in the DLF divestment in that close to Guindy, there is Velachery Road, where Murugappa, the end user, came and bought the property at a very good pricing. And that triggered the whole market in Chennai, followed with what you're calling about the Basham acquisition of the Standard Chartered, which has all triggered the market from a CBD perspective. So I would, 4-5 years back, if somebody would have come and asked me what is the valuation for any micro market in CBD, I would have given a band between 4 to 5 crores as a band without even looking at the land. Today, that band has moved from 4 to 5 crores to about 7 to 9 crores. And these things can vary based on the FSI possible, the frontage, but that's the band movement which has happened, which will have an absolute, from a perspective of an output, the pricing will definitely go up in those CBD markets. So today, if the market is hovering around, say, 18 to 22,000, time will not be very far off where you see the band moving towards 25 to 27,000 rupees on an average across CBD. Because at this price points, it becomes very difficult for any developer to launch a price below this price point.
Right.
From an overall Chennai perspective, I'm seeing the trend across micro markets because Chennai is a linear development. You have C one side, then you've got OMR, GST, Pune, all that. It's a linear development. So there is a constraint of good supply plan, unlike what you see in a very rounded development, circular development, what you see in markets like Bengaluru and Hyderabad. That's a constraint which the government is trying to stitch across all the three the linear roads. Once that comes in complete, you will see more supply coming in, of land coming in, which will stabilize the market.
Staying with Tamil Nadu now, in the months running up to election season in the state, political parties that conduct election rallies may have to pay an election deposit as they take accountability for safety and compliance at their poll rallies. That's more or less the consensus arrived at the recently conducted all-party meeting in the state to draft SOPs for public meetings and political rallies. Now, this, of course, was called for by the state government, and the meeting also concluded that all election rallies would be conducted only on submission of a 10-day notice, and that 50% of a party's security deposit would not be refunded if the turnout at these meetings exceeded approved attendee numbers. The draft SOPs also provide for mandatory drinking water at all public rallies and pre-designated pathways for ambulances to arrive and exit. Moving to Karnataka now, thousands of sugarcane farmers have taken to the streets in Belgavi in North Karnataka protesting the government's procurement policies. The farmers have demanded that the government fix a minimum price of 3,500 rupees per ton of sugarcane cultivated, which they say would be in line with how much sugarcane cultivators in neighboring Maharashtra receive for their harvest of sugarcane. The issue in Karnataka is that sugarcane cultivators here are presently being paid a floating price for their harvest, which could vary depending on a host of uncertainties, including recovery levels. Farmers now want that changed and are demanding a fixed price for their produce. The government is presently engaged in negotiations with these protesting farmers. Well, on that note, it's a wrap on this edition of South Central. Thanks so much for watching. We'll see you soon with more news and updates from South India. For the moment, it's goodbye from us.